Good evening to all of you, sir.
Hi.
Hi.
Hi. Good evening to you as well. Thanks for taking the time to speak with us. Could I, sorry, just get your name, please, and then we could just
Well,
introduce ourselves as well.
let me introduce myself. I am Rajni Hasija. I am looking after the profile of a chairman and managing director for this company called IRCTC, that is Indian Railway Catering and Tourism Organization, Tourism Corporation. And this call has been arranged by your team. So over to you. If you want to have insight of the company, I can give you in brief. And if you want to discuss something very specific, then we can go straight to the specific question answer session.
I think we can go to specific Q&A session, actually. I've got your latest presentation in front of me, and I'll give you a brief description of who we are. Mark, I'll forward it to you, actually, in case you haven't got it.
Thanks.
But so Somerset Capital, we're investment manager focusing on emerging markets, and we take a long-term view on our investments. So typically, sort of 3 to 5 years plus. Mark and I, we work on a fund together, and we're interested in your company for various reasons. So, with that in mind, yeah, we could go straight to Q&A, please.
That's better.
Excellent. Okay, thank you. So I'd just like to start off with a top-down view of where passenger numbers are now versus pre-pandemic, including and then obviously sort of post-second wave, and then just get your understanding of the recovery rate that you've seen or haven't seen. Thank you.
So as we all know that the pandemic has been very, very bad as far as the IRCTC concerned and the entire tourism and hospitality industry is concerned. The pandemic has been equally bad for the entire world. So IRCTC is no exception.
Sure.
The trains were in the first wave. There was a complete lockdown in the country. So the movement was disrupted. So was our revenue in the last financial year. With this financial year coming up, if you recall our financial results of the 1920 as compared to 1920-21, we could gather only 838 crores in comparison with the 2275 INR crores CR and INR in 1920. Now in 21-22, when we started improving in the month of April, all of a sudden the second wave had set in. So that further impacted our business, especially the tourism business could not take off till August. It is only in September that the tourism business has started. But fortunately, this time the entire lockdown was not there. Restrictive lockdown was there and few train operations were happening. It was a blessing in disguise kind of a thing. Three segments were not doing, especially rail near packaged drinking water, catering, and tourism was not doing good in the initial months. But the internet ticketing was doing better than the pre-COVID level also, because of the two main reasons. That is, the traffic had transitioned from offline to online mode in country. There was less movement of people in the country, so the more and more bookings were happening uh, through online mode. So IRCTC as a company was a gainer in terms of convenience fee. And secondly, Ministry of Railway had decided not to carry passengers in unreserved mode with unconfirmed reservation. So another class cropped in, that is unreserved got converted into reserved, that in the form of a second desk. That was the additional benefit IRCTC could gather. Additional booking was offered. So in comparison to our normal booking of 8.5 lakhs tickets in a day, We could book around 14 lakhs or 13 lakhs tickets in a day because of a increased 40% booking from this segment. Our routine booking, daily booking, average booking, otherwise in the normal scenario is 8.5. So the losses were make good by internet ticketing segment. Meanwhile, the train movement also improved. As of now, you can say that we are having around 3,000 and roughly 3,020 trains operational as compared to 3,500 trains. So the gap is gradually bridging, and IRCTC is offering services in all the trains. So this is the passenger segment where we have done much better than the past year. From 72% of the online mode earlier, now we have 83, around 81% in the reserve segment. That is, we have covered the additional benefit of 12% this year. Our
Understood.
revenues and profit from these segments have been better than all the segments and much better than the quarter over quarter and the quarter of the previous year too.
Is the regulation not to carry unreserved passengers still in place, and could that be removed?
As of now, it is in place, but we never know when Ministry of Railways decide, because if the situation normalizes, perhaps they would also like to continue with the unreserved. May not be the complete, but at least in few trains they may permit. So probability cannot be ignored, sir.
Okay, okay, understood. Thank you. So just going into the let's just go into the ticketing business, thinking about by segment. So the can you just explain the revenue model there? Because I see them, there's some various charges, service charge, convenience charge. You share some of that with the MOR. I'd just like a bit more explanation about how that works, please.
Certainly, I'll help you out in that.
Thank
Uh,
you.
the internet ticketing business of IRCTC is primarily the inventory that we sell is of the Indian Railways.
Yeah.
In addition to selling of inventory given by the Indian Railways, we are also in the business of side business, which is derived out of this, where railways have no direct control. Convenience fee is the charge that we collect by selling the railway ticket. We charge a nominal fee of rupees 15 and rupees 30 in sleeper class segment, and air conditioned segment is rupees 30. In the case of a UPI, Beam and UPI payments and the payments done through NPCI, we have given some concession where the convenience fee has been kept at the low as a 10 and 20 rupees. So through this mode, our earning in the internet segment has been in 2019-20, it was 56% of the total revenue. And at that time, 43% was from the non-convenience fee resources. 1920 finance fiscal year had a specialty in that because before September 19, we were not charging any convenience fee because of the demonetization happened in the country. It is only in September 19 we started charging the convenience fee. That is why the percentage of the convenience fee in 1920 is less. After that, you can see that there is a consistent around 66 to 69% of our revenue in the internet ticketing segment is from convenience fee. Other resources in the internet ticketing business are called non-convenience fee resources. This includes, we tie up with the various payment gateways. We have various 75 such integrations available with us. We have our B2C partners. We have our B2C partners. Then we are also providing agent authentication services. We also do API inquiry services. We have tried to monetize our website using these utilities. And we also charge some money. In addition to this, other than the charges that they convenience fee, we charge certain special fee from our B2C partners because they use our website for cross selling, where we charge another 10 rupees on per inquiry. So these are the additional charges. Then we do lot of advertisements on our website through SMS, through banners, through notification, etc. That is also included in the non-convenience fee resources. We work in cohesion with many banks where we have a co-branded cards. So far, SBI card in the Visa platform is live and the RuPay platform is live. Then we also receive certain commission because from our B2C partners, we charge rupees 12 extra per ticket also. That is a commission from these tickets that we charge separately from B2C partners. And then we have certain miscellaneous income because we have two type of wallets. We have our own payment gateway, iPay, and we are working with that. Put together, you can say 30 to 33% revenue is coming from this segment that is called non-convenience fee resources, where dependency on the railways is not there.
Okay.
This is in the
Thank you.
internet ticketing business.
Okay, perfect. That's helpful. So,
How?
yeah, go.
Sorry, go on.
No, you go.
In terms of the convenience fees, who sets those charges and how flexible are they?
Amount of the charges to be realized from the customer is decided by the board of IRCTC.
And is there any likelihood that those could be raised? Would there be a pressure to reduce them, or is this a
Depending
amount that
upon
everyone
the,
is happy with?
see, it is a service charge that we are actually realizing. So the kind of a service that we are offering, so far we have always believed, management of IRCTC has always believed to earn from volumes rather than increasing the charges. We don't want to put unnecessary pressure on our customer. When we all know that the e-services in the other countries are mostly free. So it is only in here we are charging some amount, that to a very nominal amount, so that customer is able to bear.
Hmm. And just in
there
relation
was talk of
to
sharing. Sorry.
well, that's exactly what I was going to ask, actually, Mark. Yeah.
Okay. So in
Yeah,
the recent news of potential for sharing with the railways, how was that? Do you know what happened there? Is there a likelihood that it would potentially come back in another year or so, or do you think that has gone away forever? And if so, why?
The guidelines, if you see on the stock exchange website, the word is withdrawn. So I think it conveys the meaning. The charges, the particular letter through which the sharing was done has been withdrawn. So it means in the near future may not be there.
So just to clarify, because I mean, I read that the Ministry of Rails had increased the sharing to 50%. Are you saying that's changed?
There was no sharing before that. Before 2016, there was a sharing. Then in 2016, these charges were totally withdrawn because the demonetization was happening and the digitization in the country was on its peak. So to facilitate that movement, the charges were withdrawn. Then 2019 September onwards, IRCTC was permitted to charge a convenience fee rather than a service charge. There, the BOD of the IRCTC was given a mandate to fix up the charges, and BOD of IRCTC decided to fix the charges, giving due consideration to UPI payments. As of now, the situation is prevailing. I can say only this, and the decision of the government has been the decision of the government of sharing the service charge with the IRCTC to the tune of a 50% stands withdrawn. Government has decided, and all looking to into the interest of all the investors, the decision has been taken. So I don't have nothing more to supplement in this particular thing.
Yeah,
So they didn't
that
give
was what I was trying
any
to clear.
indication as to why they withdrew. That was what I was looking for, whether they'd actually given any statement as to why they'd changed their views on that.
Well, I may not be in position to comment directly on this, so I hope you will excuse me for that. But the moral of the story is these charges have been withdrawn.
Okay, so not to sort of labour the point, but obviously it's very important. Did they state that there will be a time frame as to when they might reconsider implementing the sharing again?
So I request you to go through the letter again. It does not contain any such statement.
Okay. Okay, fine. Understood. Just separate from the letter, these kinds of decisions, are they taken on an annual basis or is it more ad hoc? As you said, pre-16, there was sharing, and was that percentage determined on an annual basis? And then, as you
No,
say,
no
no, it
such type
wasn't.
of decision, no annual exercise. It has, these kind of decisions are rare decisions, and if the thing ends well, we should accept that well. So the thing has
Sure.
ended in well, and the interest of the investor has been secured. I can't say more than this.
That's fine. That's understood. Thank you. Do you have any other questions on that?
No, not on that particularly, thank you.
No, sure. Okay. So if we think about sort of your strategy for the ticketing business, it's gotten really profitable because of the move to online. I'd just be interested in understanding what kind of run rate would you expect for the tickets? You said 8.5 lakhs. Obviously railways, highly penetrated. It's the most common form of transport. So if we think of what's next, because penetration isn't likely to increase. Now you looked at so you've got online penetration, which may increase a little bit, but are there sort of separate tiers of tickets where customers might move to? I mean, you referred to non-AC, AC, sleeper, non-sleeper, etc.
The inventory available put together is for the 8.5 lakhs. The excess ticket is in the form of a second desk class, that is the 40%. And at the most, if you see the 100% inventory, so you have scope of increase of only 19%. And in the country like our country, if we say that the total offline will be done away with, I think we may not be correct. So some booking is going to happen through offline, but everywhere now the digitization is happening at a very fast pace. And by spending in the offline, by I think government of India would also like to not spend more on the offline mode, because there the expenditure is more and they save lot of money. Otherwise, these bookings would have been taking place in the offline mode, and where each ticket is actually costing them rupees 60 or 70. So this much money government is also saying, this was also one of the plea that was taken when we were discussing this service charge issue with them. Government is saving a lot of money, and IRCTC is maintaining the entire infrastructure for getting this kind of an inventory available to the customer.
Okay.
As far as the unreserved ticketing is concerned, that is altogether a different concept. These tickets are online, but there the margins are very, very less. Without money, they would love to have us on the board, but we would like to work with commission for the unreserved ticketing, for which we are trying very hard.
That's it.
And if I'm right,
Okay.
if I read it right,
Yeah.
I think a third of the online tickets are sold via agents. Is that right?
Can you come again, please?
Am I right that a third of online ticket sales are via agents, or did I misread that?
Oh yes, we have B2B agent also, we have B2C agents also. We have good agent network, but around 20% tickets are sold by agents only. Rest is all B2C.
And how does the cost structure work with the agents
Cost
compared to the...
structure is the revenue of IRCTC is not shared with the agents. In fact, the burden is borne by the customer. If the tickets are booked through agent, then the customer pays more because he adds the delivery at their doorstep, print of the ticket at their doorstep, take the call, and they are not exposed to, they pay him money and he pays through the credit card or whatever mode he has with us, or through rolling deposit he works with us. So for additional services, he is authorized to charge rupees 20 in the case of a sleeper class and 40 in the case of a AC class. But all these charges are borne by the customer. The revenue of IRCTC per tickets always remain the same, whether it is booked through B2B or B2C. Rather in B2C, as I mentioned earlier, the charges realized are rupees 12 additional to the convenience fee normally that we charge.
And do you see over time agents being disintermediated, or what do they provide that cannot be gained directly?
They have a personal access to the customer. They provide them the booking print at their place. And in case the trains are cancelled, if the customer does not have that much literacy level, although we normally take the phone number of the customer, but there are group movements happening, they are assisting them in the groups also. Now we have come up with the sale of food items through our portal in the form of a e-catering through our app, Food Track. So they assist in getting them also the food booked. We are also in the field of a hotel booking and bus booking for the last mile connectivity. So the further assistance in the journey is provided by these agents. And maybe in targeting the train, which train should be booked so that they are able to get, and doing the navigation, searching the timings, because if they do it on the site, they may have some challenge. That is what they feel. So they are booking through agents. So in a way, but the very less booking is happening through, I think, agents. B2C is gradually picking up and B2B is almost static.
And so when you do your, I know that you've added recently your bus booking services, is that all via agents, or does some of that go directly to the bus companies via your websites?
Could not understand this.
So you've just started.
We started our bus services in the time of a COVID only. We had integrated earlier when the COVID happened, but we could not launch it. So we were tying up with the state authorities directly initially. Then we saw that it is not happening because many of them are not having the ready-made APIs available with them. So we partnered with two buses, that is Abhi bus and Red bus. So we exchange API with them, and those bookings were made available to ensure the last mile connectivity. Now we have started doing promotion with them. We are going to associate our partners also, so that the last mile connectivity is also provided as a bouquet of services, because IRCTC has come up as a full-fledged OTA portal now. So we have everything available other than the car booking. We have everything now available. We have a air booking, we have a hotel booking, we have a foreign exchange also, forex also, and this bus booking is also available. So you can say that gradually the bus booking will also pick up once more and more promotion happens.
But there's no agents involved in your bus
No.
bookings, is that right? It's direct.
Oh no,
Yeah.
no, it's all B2C. Sir.
Can I just expand a bit on the OTA sort of point that you made, which seems to be the sort of the overall strategy when you can comprise some of the other segments. How much sort of inventory do you take on your books, or is it all sort of commission based?
All inventory is commission based in the case of a bus only. We are working, we are not operating. We are working on a commission model only.
But I mean, so if you think about air tickets, etc., things like that, you don't buy air tickets in advance and hold them in inventory. You will just sell them as and when demand comes through. That's the bit I'm trying to understand. Similarly with hotel bookings, etc.
No, we don't hold any inventory. We don't hold any inventory.
Okay, so no inventory holding of
We
ticketing
are
or
just firing the
yeah.
request, and if the bookings are confirmed, we are getting it. And most of the time, the bookings are confirmed because
Okay,
the demand is less as of now. So
got
bookings are
it.
available in plenty in the case of buses.
Not just buses. Sorry, I actually meant in everything else as well. So air tickets, hotels, railway.
Air ticket, we block inventory, yes. When we are operating our own tour packages, then we block.
Okay,
Then we
fine.
block in advance when we are operating our own tour packages in the outbound also and in the domestic packages also. There the group reservations are held up. Then we make a
Okay,
package, then we sell them. And if we are not able to sell them, then we release at such a period where we don't make any losses.
okay, understood. Does that usually happen? You don't make losses on your air tickets if you can't sell them?
Uh, Not as of now, but when some transition happened and one of the airline got closed, so there we had some challenges of the refund. So we took up the matter to DGCA and got that sorted out. Still, some refunds are pending. So we have certain
Okay,
complaints pending with us when the jet was
okay.
closed.
Oh yeah, fine. Okay, okay. And sorry, and the same for railways. Just to, as you say, you manage the ticket inventories on behalf of the Indian Railways, but you don't buy any in advance unless you are providing tour packages, presumably.
Yeah, correct.
Understood. Okay, fine. How much inventory? I mean, I can look it up actually, to be fair, on your accounts, but typically of what you sell, what proportion of that is sort of pre-booked and held by you? Um,
Pre-booked in what? Railway ticket or which inventory you are talking about?
well, let's do railway tickets because that's obviously your biggest business, but you know some of the other businesses as well would touch on. I'm just trying to get an understanding of you know two things actually. You know, one, what's at risk if you don't sell that inventory, but two, where that penetration is because yeah, maybe that inventory grows because you're going to you're moving towards being a sort of fully fledged OTA and you're doing more packages,
Okay,
etc.
okay,
And that
okay,
there's a
okay.
higher
I'll
margin in
explain.
packages.
See,
Thanks.
IRCTC is in the business of a hotel, bus, air, and cruise also. In air, the inventory is blocked only when we have to make our own packages. Otherwise, generally the bookings are into B2C pattern. Or any special offer in case any airline gives that you buy this much inventory and we are pretty sure that we'll be able to sell it off, then we definitely take that inventory. We block
Hmm.
on certain occasions, which we have done during seasons in the past. This year we have not taken any challenge because of the COVID. In the cruise also, when we sell cruise, we block certain inventory and we know, we are aware of the condition. We are normally able to sell whatever inventory we block. So we take
Hmm.
excess after that. As we know that industry plays in the volume, so if you block more initially, you get better rates. So where
Yeah.
we are confident that we'll be able to sell off, we buy in advance. In bus, we don't. So risk is minimized in the case, and such no such losses are actually happening on this account because due diligence is being taken by IRCTC team to avoid such cases. It's only when we are pretty confident that this particular destination I'll be able to sell it off, we block it.
Got it. Thank you. That's helpful. Thanks. Um, okay, so if we just think a bit about the um, so overall, if I asked you what your strategy is for the sort of ticketing business, what sort of, if you could say three things that you'd like to achieve in the next 1 to 3 years, would they be?
First thing, to bring it to the 90% level, making people more and more comfortable, making it so user friendly that I can make it to the 90%. Because
Mhm.
10% or 12%, 10 or to 8% will happen through offline mode that we
Sure.
perceive. So our intention, second intention is Now the time has come that we should come out of the clutches of the convenience fee. Convenience fee, in any case, it is going to be there. So we should start increasing our non-convenience fee resources, for which we are in process of tying up with a strategic consultant for us, who would be where we would be using our database to monetize the services. Thirdly, we are in process of monetizing our assets heavily. I'm talking about our digital assets heavily, so that our services are used by the different companies on payments, good payments, and IRCTC is able to earn revenue in terms of non-convenience fee resources. These are the other resources.
So
Fourthly, to provide an advertisement kind of a portal, because you understand that in government, all kind of advertisements are not permitted. Few advertisements are considered as surrogate advertisements. So that surrogate advertisement we have to refrain from. We have to, within the restrictive ambit and the guidelines issued by the government, we have to provide the advertisement services and monetize our digital assets to the best of our efforts, and the strategic consultant shall be helping us in that. They're going to continue. The tender for that is very coming up soon on our website.
sorry, just on that advertising, you're saying so government businesses are not allowed to advertise, but you can,
We
because
can do advertisement, we can take advertisement on our
yeah,
website, but few advertisement like political advertisements we cannot take. We
yeah, sure.
cannot take advertisement of the lingeries, etc. We cannot take. So we are a government website. We have to work within the ambit of issue guidelines issued by Government of India. Our site is government website. So that is why
Got it.
advertisement offering. Otherwise, our rates would have been more. The kind
Understood.
of a reach
Understood.
we have.
Yeah, got it. Okay. And when you say monetizing your assets, so you mean, is that booking through Paytm, etc., things like that,
We have
wallets? I don't
already
know.
launched that. We have already launched that. But B2C, we have to be very restrictive, because they are, you call us monopoly, but actually we are not, because we have created competition for ourselves by bringing these partners along, and these partners are also there, so we have to give best of the services to them and be at par with them. So it's kind of a win-win situation for both of us, but at the same time we have to see that the interest of the IRCTC is secured. So not only that, we have to bring the partners like Paytm. Yes, we are in process of doing that. Many such partners. I have such, I think 23 to 24 B2C partners available with me. But we would like to have our own payment gateway where we would like to earn from the transactions also. iPay is our payment gateway where we are working closely with, and as of now we are using this only in our own environment. To take it out as an aggregator model, we need to have certain licenses issued by Reserve Bank of India, for which we are making necessary amendments in our memorandum of association. So this is the roadmap for increasing, and then we have also tied up with many banks. The transaction happening through, we are charging, then advertising ourselves in a manner and using the product fully for cross selling our own product, so that we can earn from the other segments at the same time.
Okay, got it. Do you have any questions there, Mark?
Mainly just about the cost of investment in the digital side of the business. So I don't know whether it's a good time to go on to costs. Yeah, but yeah, that's one thing. We've seen this in many different businesses and places, that you can get spiraling costs invested in e-costs. And I was wondering, how are you, and particularly if you're just going through the whole process at the moment in terms of monetization, what do you actually have factored in over the coming years?
Uh, See, our portal is designed to handle normally 8.5 lakhs, or say 9 lakhs, on few days 10 lakhs inventory in a day. If the regular transactions happening to the tune of a 14 lakhs, it means we need to increase the capacity of the portal also, as per, since the load has been segregated, so we could manage. Improving the portal and providing the support is a constant endeavor. IRCTC last year had decided to invest around 1,100 crore in upgrading the portal. Many of the such tenders have been placed. And since our infrastructure Engate was formed in the year 2014, we have already spent around 6 years in the infrastructure. So we are in process of replacing getting the new technology and replacing the same. Integrated inquiry services are also getting ramped up. So it is a constant endeavor, and if we don't do, we'll be out of the industry. So this year, we have planned 100 crores, nearly 100 crores for that. Capex in the internet ticketing environment alone.
And outside of the internet ticketing, what would you expect the investment to be there? For digitalization, further
We
digitalization
had
outside of ticketing.
in 1920, when the COVID had taken place, we had to defer it because it was physical execution of the work challenge. So it is a deferred demand which we would be carrying out, and certain new demand have also risen, like increase in the bandwidth, etc., making the site faster, launching of the new app, making constant changes in the user interface for which the technical support has to be there, and tying up with the different ISPs so that the backup arrangements are there as far as the bandwidth is concerned, and replacing the entire hardware. So I think total 100 this crore, but the total investment is around 200 250 crores is the expenditure in this.
Thank you. Um, just just thinking about sort of the other big business in terms of revenue. So catering and hospitality. So just so that we have it clear, the catering, static or mobile, is that all third party on which you take a commission? So again, you don't operate anything there. It's all sort of partner operated, either mobile or static. Just on that segment first.
Catering done by IRCTC only to showcase we undertake some work departmentally too. To set up some example, only 2-3 trains just to showcase our strength we take departmentally. We are still running 2-3 trains departmentally. Rest of the all catering businesses, be it static catering, be it mobile catering, is looked after, is being undertaken by our service providers, our partners, on a outsourcing model, and we work on a commission based model, and certain percentage of the catering revenue is also shared with the Ministry of Railways, and the ratio is 55% to 45%. That is 45% is of the Indian Railways, 55 is with the IRCTC.
Okay, and that commission, is that similar to the sort of the convenience fee, where you don't really want to
Actually,
increase?
those cannot be compared,
Okay.
because you see this in internet ticketing, entire expenditure is done by IRCTC, and in
Yeah.
catering the trains are run, the trains maintenance, etc., is done by the railways. So water in the train is provided by them, electricity is in the train is provided by them, any technical failure of the equipment in the train is rectified by them. So that is why they are charging 45% of the share.
Yeah. No, sure. What I meant was,
In internet ticketing, other than the inventory belongs to them, entire expenditure, even the backend partner expenditure is also done by IRCTC.
hmm,
So there is a difference.
yeah.
That
But
is
what I
why
meant was that,
we had a better stake in getting the thing back.
understood. Yeah, that makes
इसी
sense.
चला दो यार.
So just on the commission model, what is the percentage? Does that sort of vary?
The percentage I shared, that 55% is shared by IRCTC and 45 by them, but the commission actually, we are also incurring some expenditure. There are two kinds of a trains which are running. Actually, there is three type of a catering actually. One is the mobile catering, another is the static catering, and third is the online catering.
Yeah.
So where one can order online. In online catering, when we buy food, we charge at least 15% commission from the vendor. Customer buys at a 15% higher rate, or it is inbuilt in the cases, and share of the IRCTC is 15% in the case of e-catering. We call it
Yeah.
e-catering, where one can order online. But in the case of a static catering, our share is to the tune of again 55 to 45 with the railways and IRCTC. Whatever
Yeah.
license fee we
Yeah.
get, and some expenditure has to be done in maintenance, in staff. So at times, we, if the unit is very important, we provide the material. For example, the base kitchen we had set up to ensure the unbundling model. There, the expenditure of 10 to 12 crores was done by IRCTC. So some
Is that for
expenditure
the
is also done by,
e-catering?
yeah. No, for the static catering.
Okay.
In the mobile
Okay.
catering also, IRCTC has undertaken work of upgrading few pantry cars and providing like RO facility in the car so that the quality of service improves, and POS, that point of sale machines, so that the transparency of the billing structure is there, and at times providing the making training the staff online, and making the staff licensee staff training the licensee staff also, so that the quality of the service improves. So there also we spend.
Understood. Okay.
That is a very minimal expenditure, but it is purely licensee model otherwise.
Yeah. Okay. So just to get this straight, so firstly, just the commission that you charge your partners, what is that as a percentage? Is that still the same as e-catering, or is it lower?
Concession fee है ना? It varies from unit to unit. If it is a mobile unit and it is a prepaid unit, where the Ministry of Railway charges in advance the catering, uh, the amount that to be paid for the food. In that case, in those trains, the model is different. There we charge additional concession fee from them, and the license fee also. So what we
Okay.
share with them is only the license fee, not the concession fee.
Understood. Um, and if you're using partners on the mobile and the static, etc., so they will make the food, they will provide the person, presumably, who will go up and down the railways with the food. Could you explain why you have to invest in the carts, etc., and the POS? Because that doesn't make sense to me. I thought that it would make
No,
sense that the
I
whole
said
operation is there.
initially when the concept of a pause was built in, we had to bring in the concept. Then we
Right.
had spent some
Okay.
just to make them understand, make them trained. Now everything is
Right.
being done by licensee only.
Okay. And that's the same for the
If that was the
carts.
initial, when you start
Yeah.
a concept, so proof of concept is also one thing. There, the proof
Right.
of concept who starts it has to be borne by the person who is actually bringing the POC.
Understood.
And for the online, I'm right. It's just you partner with restaurants and they deliver the food to the trains. Is that right?
Yeah.
And how, in terms of timing, how does that work? Do you hold it on the train and then
That is
deliver
the
it to the?
challenge. That is the challenge which Zomato and Swiggy don't have. We have. Like it's a mobile unit, and it's very different from a static unit. Even if you are 10 minutes late, the train is gone. So
Yeah.
you have to have some presence at the station. We have permitted our fellows, and with the platform permits, they have all the passes to enter at the station. They have some bases also nearby the station. At few places, we are thinking of providing some space at the station, so that we are working on a model of a food aggregator, delivery aggregator, both. We are working with both. So these delivery aggregators and the food aggregators, they have tied up with the various agencies and take orders, and then all food is aggregated by them at the station. The person, for example, one brand is Haldiram in India. He brings and give the food to my delivery aggregator. In turn, the supply is done by the delivery aggregator. So just to meet the timings of the train.
And so, can you explain if I'm on a long train journey, I order online? Does the food
Most of the
start the journey
food
with
is,
me?
the long journey trains have better orders, and the short journeys also have a better orders, because as of now, no cooked food on train. So e-catering is running better than the pre-COVID level also these days.
And can I determine when it's delivered, if it's a long journey? I mean, are there various
It
points
is
it's picked up, or
delivered
does
only
it?
at few stations. See, one cannot compare the food in the train with the food of a e-catering, because e-catering food is served only at a particular station. Suppose you are hungry at A station and the journey between A to B station is around 100 kilometers. So you have to be hungry for 2 hours. So there the train food is making the difference. But if you reaches at station B and the food is available, you will get it. But you have to be remain hungry for that period. So both, if you want to eat food on the train when you are hungry, then your food at the train is required. But if you want to wait and be a little patient, then the food will be delivered at the station you want, provided the station is in our list where we can supply the food. We can't
Yeah.
supply it at the remote locations. We have to have some town nearby, some arrangement where I can serve you hot food. I cannot serve you cold food unnecessarily to invite the complaints.
And how successful is the online ordering? Because it seems quite. You've got a number of
It
partners, as you
is,
know.
it is,
But
it is picking up very, very fast. We are better than the pre-COVID levels. And earlier we were taking around, though the quantum of the order you may be sounding very less as compared to the travel Indian Railways app. Earlier we had only 21,000, but during the it has during the weekends the order crosses I think 30,000 meals a day, and average comes out to be 26,000 or so in a day. And we are still improving, and we are now permitted all our food units at the station to provide food in the e-catering format also, so that they have a better sale prospects and they can also provide the food wherever they can. And all system has been made online. In the payment to vendor is also online. They need not wait, the third day payment goes to them.
How are you broadening the station network
We are
actively?
improving. Initially we had around 370 stations, but in COVID period the e-catering was closed. It's only in February 2021 when we started the e-catering again. And if you see the journey in the 6 months that we have commenced, we have added around 275 such stations.
Okay. Thank you. Um, that's very helpful. So if we think about the margin for the catering and hospitality segment, it was 17% EBIT margin. Presumably that's because there's lower utilization, etc. I might be wrong, but what are your targets there for the margin for the segment?
As a company, we would like to earn more and more, but unfortunately, because of the COVID and the festival season in India, you know how big it is. So as of now, the cooked food is not being served. It is only the ready-to-eat food is being served. So our revenue after COVID has gone down in the catering segment. We have now recommended our ministry to open up, and ministry is also considering and examining the issue, because there is a life of the person is more important than the food. First intention is to save the life and to reduce the touch points. So far now the restriction in most of the states have been done away with. Perhaps after this festival season we may hear some good news, perhaps, since I'm not the deciding authority, so I can only apprehend. But we have recommended strongly to our parent ministry to open up the cooked food. If the cooked food is opened, then our revenue from the cooked food catering business, put together all segments, mobile, static, and that, should be 1500 crores in place of annually, in place of 105 crores, which we did in 1920. Because this food will be served with the increased price, increased tariff, which was done in the month of November 2019, but could not be implemented because of the COVID. On 23rd March, COVID had happened, and then from 28th March, we were supposed to implement that. So we
So
can
you're
have
saying
a
that the
very rosy
revenues
picture.
will be 15 times greater than 2 years ago if cooked food is open up. Did I get that right?
See, This time earning of the catering is around, I think, 250 crores. Maybe
Okay.
little more when we close by the year, because we are serving only ready to eat food.
Yeah.
And the license fee from this segment is 1/4 or 1/3 of the what we used to get earlier with the cooked food. Once
Hmm.
that cooked food opens up, then our revenue is going to be in that tune. 45% of our revenue would be coming from the catering alone.
Understood. Okay. So right. So hold on. How does that work with the e-catering? Because presumably, so that isn't that hot food?
Can you please come again? I've not understood your question.
I was saying you said right now cooked food is not allowed. But
E-catering is
with
a
the
cooked food. E-catering is
yeah.
a cooked food.
Okay.
But in the train, cooking is not allowed.
Okay.
In
Got
any
it.
case,
Got it.
cooking is not, but used to pick up from the station. That is also not being served.
Yes.
So
Understood. Okay.
if the person is ordering cooked food, that is his own risk. But in Rajdhani,
Yes.
Shatabdis, which are the premium trains, there the food is payment is made in advance and food is provided by the railways
Yeah.
through IRCTC, and we in turn take help of our service provider.
Got it. Okay. Understood. Um, okay. Perfect. So the other question I had on the hospitality side, I just with regards to that, if you think about the other things that you mentioned with the OTA, the tie-ups with the hotels, etc., are you involved at all in physically owning any assets, or is that your intention?
We
I.e.
have around
hotels or anything?
we have around in the packaged drinking water and in the hospitality segment. In packaged drinking water, we are owning around 18 plants, out of which 15 are already commissioned and 3 are in process of commissioning. And 2 more will get commissioned soon. By 23, we will be having around 18 packaged drinking water plants. The brand name is Railneer.
Yeah.
And in the other segments, infra segments, we are in the process of making budget hotels.
Okay.
So we have already bought a land twice in Lucknow. One hotel is being constructed and will be over soon. We have a land in the Faridabad also, in Delhi, where we are constructing one small hotel, and in Kevadia, and that is in Gujarat. There also we are constructing one hotel, and in Khajuraho also we are constructing one. And we are in process. We are in talks with various state governments. Our model is that we take land from the state government on a subsidized rate, and then with the help of a state, and there also we provide some support to our partner. Capital support is given to our partner, and then recover the same gradually, and some gain some interest out of that. So it is also a very good model of business model that we have, where the probability of getting the losses are not there.
And who is the target audience for that? In terms of which income bracket is your target audience for the hotels?
It is the budget segment, sir. But all these are hotels are budget segment hotels. But we can go up to 3-star. 5-star initially we had decided, but we have thought ki we should come out of that and start making the budget where the demand is more.
Hmm.
And is that
So
budget individual travelers or businesses as well?
Yes, sir. Right.
Yeah.
Anyone. It's a
Thank you.
good
I'm
deluxe,
afraid
going to be good deluxe hotel, which any with the all kind of a neatness and a good hospitality services, any segment can buy.
Okay, thank you. I'm afraid I have to go to another meeting, but I will leave you with Kumar, and thank you very much for your time.
Thank you.
Fantastic. Thank you.
excellent. So just just wanted to ask you there, Rajni, how much time do you have with us? Because it's already been an hour. Do you have time to answer a few more questions?
Well, I can take, but you have to be a little fast.
Okay, well, I have, thank you. Maybe just one more question, just to clarify that hotels sort of management. So you buy land at a discounted price, and then you provide capital support to hotel partners. So these are hotel companies who will construct the hotel and manage the hotel. and then you will gain a commission out of whatever they earn. Understood. Got it. Perfect. Do you have partners already in place?
Yeah, we have. We have, like in Lucknow hotel, we have for the both the hotels we have partner in place. Khajuraho also, Faridabad also, Kevadia also. All the 4 places we have partners in place, and the hotels are
Okay,
being constructed. They are in process.
got it. Okay, perfect. And when will they be constructed?
I think the Lucknow shall be ready soon by 23 and 22 rather. Lucknow will be by 22 and Khajuraho will be by again end of 22 or middle of 23, somewhere near that. Kevadia we have just started, so
Okay,
Kevadia is going to bit maybe 23 end or 24 beginning.
understood.
Railneer
Thank
plants
you.
shall be commissioned. All Railneer plants, the 5 in the pipeline, 3 plus 2. I think
Yeah,
by 22, 3 will be commissioned and rest 2 will be by 23 will be commissioned.
got it. What's the, I saw your margin had come down because your utilization rate in the plants is lower. Has that recovered yet?
It's in process of recovering. The COVID impact cannot be done away in a day. We have started recovering.
Yeah,
In the tourism also, we have started recovering. Uh,
understood.
Products are being sold at least now. Earlier, the products were not being sold. People were not coming out.
Mm,
There were no trains also. And
yes.
we are a company which is heading the mass tourism only. So we, in all segments, we are trying hard.
And the capex, one more question. What the capex for the hotels? What are we looking at? Land and development over the next few
Uh,
years.
we are giving initial support of 20 crores in the phased manner. As the construction progresses, the payment is released. Even in the packaged drinking water also, all the plants are made in the PPP model. There, 8 crore support is given, capital support, again in the phased manner.
Okay. Okay. Understood. Um, so because the land you've already paid for, so the capex is 20 crores per hotel over the period of time.
When we fix our minimum license fee, the cost of the land is taken into the consideration. The interest on that is also taken into the consideration, and the money that give on the capital support, interest on that is also taken into the consideration. And we fix a
Understood.
minimum license fee. Based on that, we tell him to tell us the revenue share that he want to share. Minimum he has to pay, and then the revenue share is additional. This is the model.
Got it. Okay. Thank you. Rajni, thanks so much for the time and for going a bit over. It's a big business. We'll probably come up with questions. It's been very hard to get a call with you guys. You're very, very busy, obviously. So I wondered what would be the best form of contact. Email?
This is, I think, if you have any specific question, you can send us email. We have a specific investor relations cell, and
Yeah,
you can write us a mail. We can always reply you back. But request for the one-to-one meeting, as you said, your actually the issue is the timings that you have.
right. I see. Because we're in
Maybe if you
London,
can
that's
wake
right.
up little early, and then we can
Happy to
have
wake up
a
early.
regular meeting. I hope you won't mind that. So
No,
you
not
and
at all. It's totally fine.
yeah,
Happy to wake up early.
yes.
We speak to sort of Indian and Chinese companies, and regularly we have to take them at sort of 7 a.m. or
We
8
are
a.m.,
always
which is
available
fine.
as far as the investors are concerned.
Okay, thanks. And would it
We
be best to email you, Rajni, or would it be best to email investor relations?
we have a specific investor relationship team. We have a CRO, Chief Investment Relationship Officer, Mr. Anil Sharma
Okay,
is there. His ID
yeah,
is available, and very soon a specific ID in the name of a CRO will also be there, which we are going to put it on our website. You can write, and we'll personally monitor that all your queries are answered.
thank you very much.
Thank you.
Have a nice
Thank you.
evening. Thank you. Bye bye. Shukriya.